So glad you're with us on the Money. Brad Johansson with Ryan Willis, Allied Wealth. And we're talking about retirement income here. So I want to talk about refinancing because we seem to refinance when we like the interest rates that we see. If we're talking about refinancing retirement, what does that mean if we're dealing with interest rates? Because I know when interest rates are low, I'll refinance my home. Did that a long time ago. Don't know whether I'll ever get a chance to do it again because of interest rates. Cars, that changes. Credit cards, that changes. How does this have to do with retirement?
Well, Brad, it's one of these things where, interest rates have gone up dramatically, and they're the highest they've been in quite a long time. And that gives us the capacity to earn higher rates of return in various areas of our retirement income plan. An example, a lot of people have an income gap that we talk about on the show many times,
right.
All right? And I ask them at the office when they come in to see us, hey, if you've got this $30,000, $40,000, $50,000 your income gap, and understanding that all of your retirement dollars don't have to be invested the same way, how much of this income gap would you like to have guaranteed to you as long as you have breath in your body? And nearly every single time, the answer I get is all of it.
All of it.
All of it, all right? So 4, 5, and 6 years ago, when we were having these conversations, interest rates were very low.
Yeah.
And so what we would do is look at, okay, if I want all of it guaranteed, what are my options? Well, there's really 2 games in town to get guaranteed income for life, all right? One of them is a 30-year Treasury bond. If you're 60, you could buy a 30-year Treasury bond, all right? And that bond's going to pay you interest every year for 30 years. And at the end of that term of that bond, when you're 90, you're going to get all those dollars back. And then you could use that $1 million that you put in that Treasury bond, for instance, or $500,000, whatever it is, to, refinance the rest of your retirement.
I got to make sure with that I'm going to live till 90.
What if you don't? Your beneficiaries still get the income. So if you die before your wife, she still gets the interest from the bond. And then if you die, your kids get the bond, right? The bond never goes away. It's a contractual obligation to pay interest and return the capital you invested to you at some point in time in the future, in this case, 30 years. So what we are doing is evaluating, okay, if I want $50,000 a year in guaranteed income to cover my non-discretionary income gap, how much do I have to put into a Treasury bond to do it? Well, back then, it was a lot of money. In some cases, it was so much because rates on the bond were so low, people couldn't afford to do it. So we had to go to look at the alternatives to doing that with a 30-year Treasury bond. And guess what it is? It's a 4-letter word in the industry. It's an annuity. Yeah. If you want guaranteed income for life.
And people hear the word and go, don't even talk to me about an annuity.
They run.
So why does it become attractive now?
Well, the reason why it becomes attractive in any circumstance, period, is because an annuity can guarantee your income gap to you as long as you have breath in your body. So that what that does is it gives you confidence in your retirement spending plan. Because if your income is guaranteed, regardless of what happens with the stock market, the economy, or interest rates, guess what? I can go out into the world and spend money with confidence. That's an important aspect.
People are coming in and saying, you've said this so many times before, the average versus actual, and can you put me in portfolio 1 or portfolio 2? And I'd like to be in this one because this one looks good. Can you make sure I'm in portfolio 1? What you're talking about now is what we would call a zero floor strategy, where if I start here, this is as low as I can go and it grows. Am I thinking about that properly?
You are correct. All right. And so what we're talking about here is using an annuity in 2 capacities. One is a bond replacement strategy, and one is to guarantee income for life. All right. So let's start with the guaranteed income for life. The amount of guaranteed income an annuity can pay for life is a direct function of the interest rate environment at the time the annuity was purchased.
Okay.
So if you bought one 6 years ago, rates were low.
Yeah.
All right. So we had a guy calling off a radio show. All right. And we were talking about the same conversation. And he says to me, hey, I've got my annuities. And you're telling me that because I bought them 6 years ago and now rates are higher, I may be able to take the residual value, even though I have surrender charges, out of my current annuities, move them to a new annuity, and get higher income. And I'm telling you, yes, that's exactly right. And in fact, this guy was able to get an additional $8,000 a year in annual income, okay?
Simply by refinancing the annuity.
Now look at this. If that money is put into an account, all right, growing at, say, 7% from $8,000
Yeah.
over a 20-year period, the growth is $327,000.
That's significant.
Yes, it's huge. And this guy who's now a client of ours, by the way, all right, he calls this the greatest phone call he ever made. He said it was almost like winning the retirement lottery.
How about that? In the adjustment of what we're dealing with, you're telling me that not only this, but there are multiple strategies that we can take advantage. Because we talk about the rules changing all the time. We now know the rules with the rates where they are right now. And when we normally think of the rates as disadvantageous, this could change your life by refinancing something at this rate because it's so good for you.
Well, could you use an additional $8,000 a year in retirement income?
Are you
if
serious?
You want a fixed income?
Yes.
Absolutely you could. And that's the awesome thing about it is nobody saw COVID happening. Nobody saw the Fed injecting over $10 trillion of capital into the system. No one saw the supply chain shutting down. No one saw that causing mass inflation and the Fed having to rapidly raise rates. As bad as all that sounds, what it did was create an incredible opportunity for folks who bought these annuities. If you went to a dinner seminar 6 years ago, folks, if you went out and met with a financial advisor and saw their presentation and bought annuities, you should take advantage and understand that rates are better today than they were then, and your annuity could possibly convert into a new annuity to where you could generate a higher income than you're currently getting, still guaranteed for life, by the way, using the residual value of your annuity. And if you bought one for accumulation purposes, guess what? The participation rates, the caps, the spreads, all the things the insurance company does to limit your return are so much higher today simply because the amount of income an annuity pays or the amount of interest an annuity pays is a direct reflection upon the rate environment the annuity was purchased in. And rates are so much higher today than they were 5 years ago, 7 years ago.
You're telling me even if I did something at the wrong time, the time may be now to correct it? Here's what Ryan said. Somebody called in to change $8,000 a month in retirement. I didn't know. So if you're walking by the television and hearing, hold it, this is something I hadn't heard before. Maybe it's time for you to make the greatest phone call you've ever made. It's time to refinance your retirement because there are strategies that we can use to help you. Wouldn't you like this to be better? Yes. Call now. Let's put together a plan to see whether refinancing your retirement is right for you. 844-944-7555. Call. Could be the greatest one you've ever made.